Well, hello, folks. Top Gun here with you, and I got a good one for you today. Just a market analysis. My apologies. I'm going to do a deep dive tomorrow into NFT on Pulse, but today, what we're going to look at is the markets and the market pain or the market rally. So here we have some technical indicators. We're looking at the SPX, the cash index. So basically, the SPX 500 index, the trading here, as we can see, this long-standing downtrend got broken today as it finally found 4,057 as support again and closed above. So this is a great argument for the bulls to at least have a bit of a market rally this week, maybe even close up to 41.63. We'll have to see how the next couple days of trading go as we go into Friday. It is a long weekend, so people may not want to take the risk, which means we may get up here and see closing back down. Who knows? I don't actually know what it's going to do. We have to wait and see. So what we're looking for, since we've closed above this line of support, is the next one. Why do we care about the SP 500? We're into crypto. Market correlation, people. Market correlation. As we look at the NASDAQ, we can see it's also cracked through the long-standing resistance for the last couple of months, and that we have closed above my support marking line at 1200. Well, 1250. This is very bullish, folks. This is looking good. However, anything could happen. WMD could drop. Like a zombie apocalypse. At this point, I'm not ruling anything out. It's been one heck of a year, has it not? But we're talking about some short-term actions. There's been a lot of pain, and it's been an argument between the bulls and the bears. The bears might have finally overeaten. They might finally be full. They might be ready to go take a nap and let the bulls charge through the market. Why is this important? Again, we're going to look at tech stocks. Looking at Apple. We cracked through and have come back up. We're fighting to go for this next line of support, but we have found our line of support here, which I didn't have marked. This previous one found. So this is looking good. This is looking good for a short-term rally, not all-time new highs. A short-term rally. Even Tesla. Look at that. Yep, it still hasn't broken its long-standing line of resistance. Well, it has a little bit for recently, but there's a longer one to heap over. This is the same for Apple. A little bit of a rounding down. Apple's got an even higher one to try and break to get to this top side of the trend I have drawn. So the importance in this, I say, so tech stocks. Tech stocks are generally speculative because you're looking to the future, dude. What technology are they going to bring that'll change lives? You don't invest based off valuations. You invest based off the future, at least according to Kathy Wood. But this is in correlation with speculative stocks, such as cryptos, which are more like commodities, digital gold. So I've talked a few times about the indicators. The stock market's coming up. The dollar's going down. This is good for us, for trading, not for the world economy. But U.S. oil, still going up. We are now retesting the support here at 114. This means there's demand in the market. The strength of the dollar is dropping a little bit, and people want to go back into stocks. The Fed could say anything to jinx this. All right, this could change in a moment's notice. But right now, we're starting to appear as though we may have terms for a rally. Now, if tech stocks and speculative risk-on assets are going to get a rebound, what would you call Bitcoin? Is it not tech? Is it not speculative? Yeah, it may get a good rebound here, folks. So it has consolidated hard at 29,000. Asking any buyers, any buyers, any buyers. As we can see this downward bull flag formation. If it doesn't get any buyers, we are going to follow this trend right down to 2,300 or 23,000 very easily. So Bitcoin is looking at still a lot of pain, but could we get a small rally up to the top side of the trend? A possible rally of, I don't know, 25%, 22% over the course of the next couple of weeks? It's possible. Again, barring any strange incidents out there happening, And then we're going to have a look at my maximum pain chart. Yes, it's time for maximum pain. Dun, 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 dun. Welcome to Hex. So here is my maximum pain chart. We'll zoom in on it. We don't need to, or zoom in. We don't need to see everything. So why do I have these levels out? Well, right there where I have the chart, where that line is drawn, that's 0. Okay? So is Hex going to 0 by June 15th? No, it's not. It hasn't been hacked. There's no issues with service. It's just a digital commodity that's not getting a lot of love right now. So it's formed a descending triangle, which would indicate that one of these limit orders, these 3 that I have set here, is likely going to be the bounce off place for us to see our rebound. After the tech stocks get one, and then Bitcoin gets one, and other crypto get one, Hex probably the last. It's usually a contrary indicator. Bitcoin goes up when Hex is going down and vice versa, but Bitcoin's been just going sideways, consolidating, so Hex has just decided to point at a 90-degree angle towards the ground. Point is, it's a speculative investment. It is a commodity, and, well, PulseChain is coming. Yes, I am not going to dare put a time frame on. I even might have a little bit of resentment about being told so many times that soon, yeah. It is going to have. So the validators are going to, a lot of the services running the validators are going to be programmed in Go, a programming language that is not Solidity, because there's been a lot of issues with the Solidity. It's not so much that Richard Hart had a crappy dev, it's that Solidity isn't even easy. It's just easier than Bitcoin. So, yeah. Go ahead, bring the hate. Go ahead, bring it, because I'm gonna say I'm not even willing to put a time limit on it. Maybe it'll happen this summer. It'll be running really well when it comes. But yeah, they're going to have to rewrite a whole bunch of the validator services to run in Go code so it can be run off of the blockchain. And this is because of switching to proof of stake instead of proof of work. So in this case, yeah, I had been very hopeful, as a lot of other people, that a PulseChain launch would encourage some spending in Hex. But as we've had a bit of the opposite effect, as Richard Hart has been keen on going after new customers, new users, is how we grow the system, it hasn't been so supportive or mindful of current users, as, well, that's the game. It's the game he's got to play. It is, folks. So I have maximum pain drawn out. I decided to mark the actual downstanding trend, and this downward bull flag, basically, at the funny thing is with the bull flag, assets either choose to go up or down at the end of it, right? They don't keep going in the same direction. Well, the only way to really go down in this descending bull flag is to plummet to 0 in a direct down line. That's not happening. So this is marking the last cheap discounted Hex you're going to see before we start coming back up to retest long-standing points of resistance. When will Hex go to all-time new highs? I don't know. I've been saying it'll be over $1 by Christmas. I do long-term. I do this short-term speculative analysis for you guys to keep you entertained, give you a bit of hopium, let you know because you love swing trading. But my investments are long-term. I like to buy in and hold in. So these are just DCA in opportunities for me. Each one of these red lines might be a limit order. Might be. So you guys have a rough idea of where I'm looking at. So maximum pain, 5.8 cents. And then, down here, 4.5 cents. Yep. And then the very, very last one, 3.4 cents. That's the absolute Harlow's bar. We're not going to make it there. It's one of these two that we're likely going to bounce off and start going to our next upswing. Like I said, we'll see the rebounds in the other markets, then probably a few days after, we'll start to see ours in HEX. How high will it go? Well, if history is anything, because history loves to repeat itself, here is the way that the last ascending trended. What is he doing? What are these fancy lines he's drawing? Well, this will help illustrate my point a little bit. Alright, so basically, when we were looking at this long-standing point of resistance, and we cracked this line of resistance, we came up, we made a new line of resistance, we cracked that, we made a new one. So after a high, there was basically 3 segments. 3 segments, you say? Funny how that works, isn't it? So, yeah, I've drawn 3 segments here, willy-nilly. I'm going to try and space these out about equally, because it's funny how geometrics plays in when you've got speculative assets. So traders that want to trade it, all they can do is do what I'm doing. Fancy TA like this. So in this speculative, the hope that we get is that we are coming down to here, most likely going to see a bounce up. At worst, we'll come down to here, at very worst, and then we'll start going up. But what'll happen? Oh, we have this weird, handy, fancy way of pain and things going. How far will we go down to test at that point? No idea. Depends on how far we go up. But then, after that, oh yeah, that's usually like when we break out, and then oh, more pain. Starting to look like something we've already done because I'm copying history. Maybe even make it to this low one before we start coming out. Who knows? Yeah, at this point, I'm willing to speculate maximum pain. That would be what maximum pain looks like, wouldn't it, folks? That would be maximum pain. But basically, we'll delete that. Again, no, I can't see the future. Right now, we are extremely oversold, but the MACD isn't even close to green impression, so we're not done overselling. The pain is not done here. The speculation, the people, the money is not coming in. Well, it is. The volatility, as you can see, the volume being traded is skyrocketing. So let's stop drawing things. Delete that. Move this up a little bit. You see this red bar here? Yes, the volume has started going through the roof because it is on massive discount. This means there's not only sellers, but buyers. Because for the volume to jump this high and the price not to just bottom out to zero means there's been a lot of buying. With any one of these bars, all that has to happen is 51% of it be selling, and that makes it red. So if it's 49 to 51, that's not a lot of selling. That could be a very big bar, a lot of arguing, and not a lot of selling. Notice this big bar here and price like barely moved. That would be one of those 49, 51% bars. Price came down hard today. Well, probably 60 or 70% to 40 or 30 selling to buying. That's how you read the volume on this. So volume is peaking. Trading is coming up. That means there is a bunch of buying to counter the selling. That is good for us. So, and being oversold, we will start going into the overbought. Well, we'll start coming up from that. This is basically almost as good as it gets for buying signals. Once the MACD starts to hint that it's ready to show a green impression on the Instagram, that is probably going to be our buy signal for when might be a good time to stock up before the next run up. And then when we cap out that, if you really think, hey, we're in for more pain, there. I'm giving you an idea, a spread of how to mark and track where it's going to trade between. Yes, maybe it'll go up, but it likes to follow these downstanding trend lines. If you need some more affirmation on that, let me do that for you. So here, I'm going to shrink this down just a little bit, and we're going to remind you of how, from this peak, the last trend lines went. Das is 1. Das is 2. And Das is 3. 1, 2, 3. And this was where we cracked over the long-standing trend, and we should have been very happy after that. Very happy. We came down to retest that line, and then just drama. We cracked back under the resistance line that had been long-standing from the all-time high to here. So that hurt. It really, really hurt. And basically, these resists. Yeah. So yeah, once we crack through these become lines of support, and yeah, we get this kind of fractional. So again, we have a high point peak, we have the long-standing trend. These are the resistance lines that we basically have to break before we can be off to the races. Which means, yeah, long-ranted video to say Wall Street. Actually, Wall Street cheat sheet. If you're not familiar with this Wall Street cheat sheet, it is kind of funny but accurate. This is a catalog of the psychology of the stock market. Are you guys angry or even depressed? See, it's funny how anger and depression fall right in the orange to red zone. What's next after the orange to red zone? Oh, the pump. When we start to get disbelief and hope. Okay. So yeah, I know I've gone through some anger, but are we at depression yet? Have we hit the maximum pain? Really on a long-standing asset? I think we've hit there. We can't have a whole lot further to go on this, folks. So the psychology, I know I've been angry and a little bit depressed. I don't know about you, but basically, once max capitulation has happened, we're off to the races. So will we even have to test all 3 of these? I don't know. But some TA to fill your time in your head with. And a little bit of hope because, hey, I'm counting on a rally. Oh, what, is there a Bitcoiner watching me while I talk right now? Look at that. You even found the hope. That wick just went green. Oh, we'll see a red on crypto, and Bitcoin's starting to see it. Oh, what did I say about Bitcoiners noticing the speculative assets going up? I wonder. There's a little hope for you guys today. Hope you enjoyed it. And till next time, stay frosty. Oh yeah, hit the like and subscribe if you've made it all the way here and you're still watching me. Help me out a little bit. Try to reach the community, further the education. Anyways, take care, folks. See you again tomorrow.